guys, it's Stock Curry, and the market fell pretty hard today. In fact, the Dow just had its worst day of the entire year. So in today's video, I'm going to show you how to make money when the market goes down, including a new way that I've never heard any other YouTuber talk about. So let's get into it! Okay, the first way that we made money today was by buying put options. SPY is an S&P 500 ETF. We bought an SPY put option about an hour before the close once it became apparent that the S&P was going to close below the 200-day EMA. For the past 9 days, the S&P has been trading in consolidation, but today it finally broke out to the downside, and I think the bearish momentum will continue. So that's why I bought a put option today, and we're already up over 12% on that option. Now, you don't have to trade options in order to make money while the stock market is dropping. There are quite a few stocks that you can buy that are going up as the market goes down. A few weeks ago, we purchased a gold stock called GLDG, and that stock is already up over 9% from where we bought it at just a few short weeks ago. By the way, if you want to learn how I find these plays so that you can make money when the market goes down, join my coaching program where I show you how to do technical analysis, fundamental analysis, and how to trade options. The link for the coaching program is in the description of this video. Now, there are also some inverse ETFs that will go up as the market goes down. UVXY and VXX are both tied to the VIX, which is a measurement of volatility. The VIX generally goes up as the market goes down. And then you've got inverse ETFs like SQQQ and SPXU, which are both tied to the stock market, and those will also go up as the market goes down. Just be aware that inverse ETFs have very high fees and are designed to go down over time. So I would not hold these longer than a few days, because if you hold these too long, you will lose money on them. And now I want to share a new method for making money when the market goes down. And actually, this method has been around for decades, but I haven't heard any other YouTuber talk about it. And the reason for that is probably because it has not been available to retail investors until very recently. In fact, Webull just added this method to their platform a few weeks ago. And that is the trading of index options. This means you can trade options on the actual market indices rather than on ETFs. And while it probably doesn't matter much if you trade XPX, which is the S&P 500 index, or SPY, which is the S&P 500 ETF, where index options really become exciting are on the VIX. Remember, the VIX is the measurement of market volatility, and it goes up when the market goes down. Until now, though, most retail investors did not have access to trade options directly on the VIX. Most retail traders had to trade options on one of the VIX ETFs, such as UVXY and VXX. And as you know, those are designed to go down over time. So call options especially are at a disadvantage when trading options on inverse ETFs. But by trading options directly on the VIX, you can capture the full upward movement without the downward pressure from the high fees from inverse ETFs. So to trade index options on Webull, just look up any of the supported indices such as VIX or SPX and then click on options. They trade just like normal options, except they are European style options, which means you can't actually exercise them. They are cash settled, so when they expire, you just receive whatever the cash amount is worth. I should also let you know that these are only available on the Webull phone app for now. They have not yet been added to the desktop app yet. Now, if you're interested in trading these index options, but you don't have a Webull account, then I strongly recommend you open one. I have multiple brokers I use, so you should too. And right now, Webull is offering a promotion through the end of February where when you sign up using my link in the description below and deposit just $1, Webull will send you 3 free stocks worth up to $3,300. Also, when you make your first crypto trade, Webull will send you $5 in free crypto. So if you want to trade index options and get 3 free stocks worth up to $3,300, you can sign up for Webull using my link in the description below. Just don't forget to deposit at least $1 and claim your free stocks before the end of this month. You only have a few days left to take advantage of this offer. Now getting into today's market news, I first wanted to let you know that the markets are now pricing in a 65% chance of a 0.25 basis point rate hike in March and only a 35% chance of a 0.5 basis point rate hike in March. So now, if the Fed only does a 0.25 basis point rate hike in March, the market won't really rise that much because that was mostly already priced in. But if the Fed does a 0.5 basis point rate hike in March, then the market will fall because only a 0.25 basis point rate hike is being priced in. Now, the other thing that we have to watch out for in the March meeting is whether or not the Fed decides to start selling off their bond assets. If the Fed decides to start selling off their bond assets, that is going to cause the bond yields to rise, which is going to have a downward pressure on the stock market. And keep in mind that this is not yet priced in. So if the Fed decides to aggressively sell their bond assets, that is going to cause more downward pressure on the stock market after the March Fed meeting. Now, we also got a lot of news concerning the Russia-Ukraine conflict that came out today that we need to talk about. Late last night, Russia said Ukraine had fired mortars at Russian-backed troops in the contested parts of Ukraine. News reports are now coming out that shelling has escalated along the front line despite a long-standing ceasefire. Now, keep in mind that the shelling back and forth along the front line is common, but with the buildup of Russian troops at Ukraine's border, this is causing concern that this fighting within Ukraine could trigger an all-out war between Russia and Ukraine. And some of the headlines that came out today were talking about Ukraine firing mortars into a kindergarten. Many are speculating that Russia now plans to use the Ukrainian shelling as justification for war in what is known as a false flag operation. So we can probably expect Russia to release more news over the next few days talking about how Ukraine is shelling Russian-backed troops, while conveniently leaving out the fact that Russian-backed troops are firing back and shelling the Ukrainians. What we do know for sure is that not only is Russia adding more troops to the border, they are also advancing their troops closer to Ukraine's border. And the United States is now losing hope that the Russia-Ukraine conflict can be resolved peacefully. This comes after Russia expelled the second-ranking U.S. diplomat in Moscow and accused the United States of failing to agree to security guarantees for Russia. Russia said they would be forced to respond, including the use of military and technical measures. While Russia failed to specify what those measures would be, they did reiterate that they do not have plans to invade Ukraine. Yet, despite Russia's repeated rhetoric that they do not plan to invade Ukraine, President Biden said he thinks a Russian attack will occur in the next few days. Biden said a Russian invasion of Ukraine is imminent. All of these escalations are causing fear in the stock market and sent the stock market plummeting down today, with the Dow recording its worst day of the year. Despite the fear in the stock market, though, oil remained fairly flat on Thursday. The reason oil dropped in spite of the rising escalation in Ukraine is because the United States and France moved closer to a deal with Iran. If that deal goes through, it would unlock oil supplies that are currently tied up in Iran. And a higher supply of oil will cause a downward pressure on the price of oil. Now, while the chance of oil falling is a lot higher than the chance of oil rising, there is still a risk that oil could climb above $100 a barrel if Russia actually invades Ukraine, as that will add to concerns that Russia might shut off the oil and gas pipelines going into Europe in retaliation for European nations supporting Ukraine. Okay, now we're going to get into our stock picks. I'm going to give you my thoughts on whether or not I'm buying the dips on a couple of stocks. We'll also have to talk about Palantir earnings. And I also wanted to let you know that the markets are closed on Monday. So this will be my last video until Monday night. So please go enjoy your 3-day weekend. Let's get into these 3 stocks that we need to talk about. All right, before we get into these 3 stocks, I do want to remind you that I am not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any assets. All right, the first stock we're going to talk about today is FB. This is Meta Platforms, formerly known as Facebook. Invest with Henry is looking to sell a credit put spread on FB. He thinks the price will go up, so he's looking at the February 25th $195/$200 credit bull put spread. So long as FB closes at or above $200 on February 25th, Invest with Henry will make a max profit of $62 while risking a max loss of $438. That means Invest with Henry will make max profit so long as FB does not fall more than 3.7% over the next week and 1 day. Of course, that is not guaranteed at all. As you can see, FB fell more than 4% in just 1 day today. And the technicals also remain bearish. While I do think FB is undervalued at this point and will probably rise back up to at least the $223 level, trying to time when that will happen is hard. FB could continue falling for another week before bottoming out. So I would wait to open a bullish option position on FB until after the stock shows some technical signs of bottoming out and rebounding. Now, if you're a long-term investor and you want to start dollar cost averaging in here, I think that's a great idea because, like I said, FB is undervalued at this point. All right, the next stock we're going to talk about today is PLTR. This is Palantir, and they're a data analytics company. PLTR reported earnings Thursday before the market opened, and earnings were not good. PLTR beat revenue expectations but missed on earnings. Now, we talked about how that might be a possibility. When PLTR gets focused on growth and adding new customers, that significantly increases their upfront costs because PLTR has a very high client acquisition cost. Now, the good news is that PLTR gave better than expected forward revenue guidance and said they expect to see continued annual revenue growth of 30% or more through 2025. Unfortunately, PLTR fell over 15% on Thursday after reporting that wider than expected earnings loss. Keep in mind that the price to sales ratio remains high for PLTR, especially with them only expecting a 30% year-over-year revenue growth. So I would not be surprised to see PLTR continue to fall over the next few weeks and months. Meet Kevin took it a step further and he said there is no floor on PLTR. He said companies who have no earnings, that is, they're not yet profitable, will continue to fall until fears surrounding inflation and interest rates get resolved. And the last stock we're going to talk about today is SHOP. This is Shopify, and they're the second largest e-commerce company in the world, right behind Amazon. Invest with Henry is looking to sell either a bullish credit put spread or a bullish debit call spread on SHOP. Both of those are vertical option strategies that make money when a stock goes up. Now, personally, I disagree with Invest with Henry here, and I gave my reasons yesterday why I thought SHOP would continue to drop. I actually tried to open a vertical credit call spread on SHOP. Credit call spreads make money when a stock goes down. Unfortunately, I found the open interest to be very low and the bid-ask spreads to be extreme. So I ended up not playing SHOP today. And due to the low open interest and corresponding high bid-ask spreads, I would avoid trading options on SHOP. Alright, I hope you enjoyed that video and got a lot out of it. Comment down below how you plan to continue to make money as the market falls. And again, if you want to learn how to trade options, if you want to learn how we find these plays and how we make money when the market's going down, you can join our coaching program. The link for that is stockcurry.vip/coaching. Also, as a reminder, Webull has their promotion that expires at the end of this month. So if you want to sign up for Webull using my link in the description below and deposit just $1, you'll get 3 free stocks worth up to $3,300. Now, for those of you who are not U.S. residents, or if you're looking to trade OTC penny stocks, I do recommend Interactive Brokers. Interactive Brokers is a highly discounted trading platform. Trades start at just $1 US, $1 Canadian dollar, 4 euros, or 6 Australian dollars, depending upon where you live. And of course, Interactive Brokers also offers the index options that Webull offers. Also, both Webull and Interactive Brokers both offer the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern Time. Now, I do want to remind you that I have material connections with both of those, so whenever you sign up for either one, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. Now, finally, I want to remind you to hit that like button, subscribe, and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you on Monday.